Today's number, 75. That is the percentage of top-grossing movies that are now sequels and reboots. That number is up from 25% in 2000. More proof that Hollywood's greatest special effect is copy and paste. Welcome to Prof G Markets. I'm Ed Elson. It is December 10th. Let's check in on yesterday's market vitals. The major indices were muted ahead of the Federal Reserve's interest rate decision due today. Notably, the Russell 2000 hit an all-time high. Meanwhile, the yield on 10-year treasuries was stable. So was the dollar. Bitcoin rose. And finally, news broke in after-hours trading that SpaceX is pursuing an IPO in 2026. According to reports, the company is seeking to raise more than $30 billion. That would make it the biggest listing ever. Okay, what else is happening? In a sharp turn for US AI policy, the US is greenlighting advanced chip sales to China. President Trump has announced that Nvidia can sell its H200 chips to China in exchange for a 25% cut for the US government. He claims that President Xi Jinping, quote, responded positively to the proposal. Nvidia stock climbed around 2% in response. However, after that announcement, the Financial Times reported that Beijing is already moving to limit access to those chips. By Tuesday morning, Nvidia gave back those gains and closed in the red. Okay, here to discuss what is happening with the H200, we are speaking with Chris McGuire, Senior Fellow for China and Emerging Technologies at the Council on Foreign Relations. Chris, thank you very much for joining us on Prof G Markets.
Yeah, of course. Thanks for having me, Ed.
We've gotten this announcement from the president. Nvidia can now sell H200 chips to China, but this is the next development in a story that seems to keep on going in multiple different directions. First, it was that we can't sell the chips, now we can, then we can't, now we can. What is the timeline here? What has actually happened, and how has this news changed our policy on whether the US can or cannot send chips to China?
Yeah, that's a good question. I'll just walk through quickly the history here. So it was starting in October 2022, the United States first implemented policies to say the most advanced AI chips that were actually drawn in line, the A100s, the level below this one, the previous generation. Anything more advanced than that cannot be advanced to China, cannot be sold to China. The policy at the time was to maintain as large of a lead as possible over China. And there are basically two prongs to that. One was maximally slowing China down in AI, and the other one was maximally investing at home. So that has been the policy. There's been various kind of ways to tighten it and close loopholes over the years. The other prominent one is at the beginning of the Trump administration. Nvidia had consistently kind of made chips that just worked around, and the Trump administration in April of this year kind of closed all the loopholes, said Nvidia can't be in the China market, but then quickly reversed that policy and allowed the H20, which was a much less advanced chip, to be sold to China. Now they are taking a much more significant step to say that the H200 can be sold to China, which is the first chip that is over all of the original thresholds. This is the first time that we're really exporting AI chips that are far greater than the intent of the controls, and that really would provide a pretty substantial plus up in China's compute capability. It's 6 times better than the H20. It's 9 times over the export control limits. So even though it's the previous generation chip, it's not the Blackwell chip that's the most advanced. It's still a very, very capable chip, and it's by far the most capable chip ever sent to China. So that's kind of a timeline here of how all this has played out. Obviously, big questions about what does this mean in the future, but also kind of, what is it? Why does this matter? And what are the implications that we can talk through?
Yeah, I appreciate that timeline. Sounds like under Biden, we had restrictions, but looser restrictions. Then we tightened a lot. Then we slightly loosened. Now we're slightly loosening again. I guess my question is, why? Why are we now loosening a little bit more? What was the impetus for this?
I think actually all the changes before now were more on the margins. The big changes, I think, were October 2022 when the United States first implemented these controls and first said AI chips to China are going to be banned. And then the action yesterday where we said, actually, we are willing to export advanced AI chips to China. So those are like the real bookends. Everything else in the middle, I think, is more the kind of details of the story. the rationale of the control was because large numbers of advanced chips are necessary to make advanced AI models, and China cannot make advanced chips themselves. This is a significant advantage the United States has over China in AI. It's probably the only significant advantage the United States has over China in AI. I think on talent, algorithms, data, electricity generation applications, it's either a wash or China's ahead, but hardware is the area where we are very ahead. There actually has been pretty significant bipartisan support for this policy historically, but Jensen Huang has argued very vehemently, particularly over both administrations, but particularly effectively in this administration, to lessen those policies. Valid question as to why. I think from Nvidia's perspective, they definitely want to have a more diverse customer base. They have three companies probably make up 50% of their revenue. That poses a understandable strategic issue for anyone who leads a business. So they want to be able to sell to more providers, but that probably necessitates them selling to China. Up until now, the U.S. government has said that's not in the U.S. national interest. That might be in Nvidia's interest, but we think that's going to materially advance China's AI capabilities, which poses national security threats, and therefore we're not going to let it happen. I think that President Trump has, deciding this, has upended that and is basically saying whatever is good for Nvidia is good for America. I think Nvidia is a fantastic company that produces amazing products, is doing great things, but I think that I probably wouldn't make as blanket a statement personally.
Yeah, I guess that's the part that is interesting, is that it seemed that this was all about national security. We can't do it. We can't sell our chips to China. It's too important. It's too dangerous. And now we're deciding, yes, we can do it. And I guess the thing that's confusing as a viewer, as an observer from the administration is why? Why now? Is it that Jensen is now buddies with the administration? That's certainly what it begins to look like when we see all these dinners, and maybe we're being, I don't know, too blunt there, but that's certainly what it appears. I mean, what is it, do we think? Why is the administration deciding that this national security concern, which seemed like such a big deal, is no longer as big of a deal?
I think it's a very good question, and I do think the answer to why this happened is that it came down to personal relationships, and I think Jensen Huang has convinced the president that this is a good thing. I think there are many people in D.C. On Capitol Hill in the administration who are very skeptical of this, who do not believe that we should be sending China our most advanced technologies, and have concerns about how China can use AI in the military and defense and espionage realms to undermine U.S. national security. It has active plans to do so. Look, there are other arguments that people make for exporting the chips. They'll tell you, well, if we don't export them, Huawei will fill the vacuum. I think that one I disagree with, because actually, if you look at the U.S. Nvidia and Huawei's AI chip roadmaps, Nvidia's chips are getting substantially better. They're already 5 times better, and in 2 years, they're going to get to about 20 times better. China's chip-making capability is very constrained. It is the one thing that they can't make really well. Sophisticated AI chips, they're the most complicated thing to make in the world. So I don't think they'll fill the gap. The idea that we could get China addicted to U.S. chips, I also just don't think there's been any technology where China has ever accepted being reliant on a foreign power, particularly, they have been adamant not to be reliant on the United States, in particular on semiconductors. So I don't think there's any putting the toothpaste back in the tube on this. Yeah. So look, there are arguments, but I personally don't think they carry as much water or are borne out by the history of the data. I think the reason is because, personal relationships have pushed big policy decisions across the line.
Yeah, it is very interesting just from a national security, what is best for America perspective, where on the one hand, it's, well, we don't want to be giving China chips to advance their AI efforts. And then on the other hand, well, do we like that we have this leverage? Do we like the fact that they are so dependent on us? And I think what is very interesting is this more recent report that we heard from the Financial Times, which is that Beijing, Xi Jinping, China is actually actively limiting how many of these H200 chips their own companies can buy. So in other words, they're saying, we actually don't want to buy them. We're going to try to restrict ourselves. We're going to cut ourselves off from this. What do you make of that report?
Yeah, that is very interesting, and we've seen this play out multiple times over the last few months. I mean, when the United States initially allowed the H20, so the kind of less good AI chip to go to China, China has blocked that. And I think that was in my opinion, very likely a negotiating ploy. I think they were trying to push for the more advanced chip, and that ploy worked. I do think there is an element here where China is trying to make sure that they protect their own market, right? They are trying to make AI chips. Huawei is making AI chips. They're not nearly as good. They're not making nearly as many, but they are trying to do it. And China will make sure those chips get sold. They're not going to let those chips get unsold and just stuck in warehouses. So they will manipulate their domestic market to say, hey, these are the things that we need to use domestic chips for, and make sure that the Huawei chips, can continue to all get sold and be used. And that will be the case no matter how many chips they make. Yeah, the question of whether or not they actually, I'm sure they do have concerns about backdoors and security, but whether or not they would actually be willing to forego the very substantial plus-ups in compute capability that sending H200s would represent, I'm a little more skeptical, but countries make silly decisions all the time, so I don't know.
Chris McGuire, Senior Fellow for China and Emerging Technologies at the Council on Foreign Relations. Chris, this is fascinating stuff. Thank you for joining us.
Thanks very much for having me, Ed.
We'll be right back. And if you're enjoying the show so far, be sure to like and subscribe to the Prof G Pod YouTube channel at the link below. Support for the show comes from Vanguard. To all the financial advisors listening, let's talk about bonds for a minute. Capturing value in fixed income is not easy. Bond markets can be massive, murky, and let's be real, a lot of firms throw a couple flashy funds your way and call it a day. But not Vanguard. Vanguard's been in the game a long time, and their scale gives them a serious edge. They're able to invest across all kinds of sectors, maturities, and geographies, which means they can spot and act on opportunities that others might miss. Some managers out there promise big returns, but those usually come with big risks, and that can mean a roller coaster ride for investors. Vanguard takes a steadier approach. It's not always flashy, but it sets the standard for what dependable investing should look like. So, if you're looking to give your clients consistent results year in and year out, go see the record for yourself at vanguard.com/audio. That's vanguard.com/audio. All investing is subject to risk. Vanguard Marketing Corporation Distributor. We're back with Prof G Markets. Google is taking another swing at smart glasses, and this time it is betting that AI will make the difference. More than a decade after the Google Glass, the company has announced plans to launch AI-powered glasses in 2026. It is creating an audio-only model that lets users speak directly with Gemini. It's also working on a version with an in-lens display capable of showing navigation prompts and real-time translation. The hardware will be developed through partnerships with Samsung, Gentle Monster, and Warby Parker. So, here to help us unpack these Google smart glasses, we're speaking with Alex Heath, author of the Sources newsletter and co-host of the Access podcast. Alex, good to see you. Thanks for joining us.
Good to see you, man.
These smart glasses, I think the first question is, Google already did it. We had the Google Glass. It was the first example of smart glasses. Then they stopped doing it because it was a dramatic failure. Now they're doing it again. What's changed here?
I think the short answer is AI. I think they see a huge opportunity, and I've talked to their leadership there about this, to build Google for your face, which honestly is a pretty compelling idea. A lot of them inside Google are also obsessed with this idea of super memory, of having all your Googly contacts, which is, for a lot of people, it's their work, it's their documents, it's their email, it's their calendar, it's maps, it's all these touch points. Google has over a dozen products with over 2 billion users, I think. So all these touch points with Gemini as the orchestrator in a heads up, kind of on your face, seeing the world and understanding it product is a super compelling idea. And that just didn't exist when Glass came out. I mean, AI was but a twinkle in everyone's eye. And society has also gotten to a point where people see the Meta glasses out and about. There's all these AI wearables. Sam and Johnny are doing their thing. And there's just this growing, I think, social acceptance of wearables and AI, and I think the timing for them feels good. And it doesn't hurt that, Meta is seeing early sales traction with the Ray-Ban partnership, starting to actually sell, millions of units a year. Those kind of numbers will get anyone who is a potential competitor interested in the space.
Do we know anything about what they will look like or how they will work? Do we have any specs out?
Yeah, so they're adopting the Meta approach, and it's actually the Android approach. I do think you could map this to how they've approached Android, where they work with a ton of OEMs. And in this case, the initial products are going to be in partnership with Warby Parker, Gentle Monster, which is a huge eyewear brand in Asia, some others. And then I do think we will see, I don't know if they're going to call it glass per se. That would be pretty ballsy. I think they should. I've told them that. But we will see a first-party Google, experience too, in the same way that Google has Pixel, but then Android is everywhere, and Samsung sells the most Androids. They really want this platform, this Gemini AR software platform, to be the bet and to be everywhere, which is a real assault on Meta's strategy. Luckily, Meta has the Luxottica partnership, but Google is going for all the others. And then that just leaves Apple with a fully, classic Apple vertically integrated approach. And I expect to see, the Apple glasses in a couple of years.
It's so interesting to see how this market has evolved over time in Silicon Valley, because, we had one era where everyone thought glasses were the next thing. And we saw the Google Glass, we saw the Snap spectacles. We've even seen, the Vision Pro. We've seen what's happened with the headsets and all of that. Then it seems to get put to bed and people seem to say, okay, this isn't going to happen. Now it's back. And I wonder why it's back. Is it, you mentioned AI is playing a piece of this. Is it that Meta also proved that it can work?
Yeah.
If, I guess, they look good?
Yeah, if they look good. I think, people in tech don't understand this basic concept of people don't want to wear ugly things. And I think for a long time, it was really hard to get through everyone's head that the bar to putting something on you with technology is just super, super high. It's not like a phone. It's not like trying a foldable or something. And Meta finally cracked that with Ray-Ban and Luxottica, and a product that's not bad. It's not amazing. The AI is not really what people use it for, but for taking photos, for listening to podcasts, all that stuff, it's a good product, and it looks like glasses, and you can't really tell the difference. And that is the bar. So showing that and then seeing the early sales traction, yes, I think that kind of quote unquote validates the space. I've been reporting on AR glasses for a decade, and they were kind of the original AI in the sense of all these founders, all the way up from Zuck down to Evan Spiegel, would talk about this thing as the next major platform that's going to change everything and re-architect how we use technology. And AI ended up kind of being that thing, right, in the last few years. And now I think everyone who's been, the builders in Silicon Valley who've been obsessed with AR glasses as a replacement for the phone are finally going oh, AI now supercharges this, and we have a path to making this socially acceptable.
Just looking at Wall Street's reaction, we didn't really see any reaction in the stock. We did see a huge reaction in Warby Parker stock, up 24%. This is a far smaller company, so that's why we're seeing that.
That's crazy to me, because this Warby Parker thing this is over a year old. They announced they were doing something with Warby Parker, I think in the spring. It seems a little twitchy to me.
Yeah. What do you make of Wall Street's reaction overall? Just on the Google side, Wall Street doesn't seem to care that much about this. They're certainly not really pricing this in. If this is going to be the next frontier, the next platform, investors don't seem to believe it or take it seriously yet.
It's too uncertain. The timelines are uncertain. Everyone would tell you, they'd tell me in interviews that AR glasses are right around the corner. They're just going to be in 3 years, and they've been saying that for the last 10 years. So it's just a platform that has constantly been delayed. So I'm not surprised by the reaction or lack of with Google. But it's an AI story, right? There's Gemini involved. So if any Gemini is going to touch your stock as a smaller company, you're going to get that bubble pop that you talk about so much on this show. Those kind of stock reactions are the bubble ad. Let's be honest. This announcement does not warrant a 24% jump in Warby Parker stock. I am not a stock analyst, but I just know I know facts, and I know just reality, and it's ridiculous. And so I think just everyone is so twitchy about AI. And if you can say you're aligning with who is seen right now as kind of objectively the category leader in AI, Google, of course you're going to get that pop. It doesn't mean it's here to stay, but you'll get it.
Just as someone who's covered this stuff and studied these technologies for a long time, What do you think of AI glasses and smart glasses? Do you think that they are the future? Will we be walking around interacting with screens in front of our eyes?
I always have. I've loved the idea of it, the sci-fi idea of it. And I've used so many prototypes over the years. Some are good, some are bad. Did you get to use the Meta displays that they just teased, or I guess released a few months ago?
No.
Okay,
I've tried on the Ray-Bans and taken some photos and played music, but that's it.
I've got those. Those are a genuinely wow moment when you do the demo. They're not like a product in the sense that they're ready to be like worn all day and used all day, and the AI is not quite there. But when you see the interaction modality, the way it like feels, the like kind of aha of like, oh, getting this context in my vision, it's just like obvious. It's just obvious, man, that this is where it's going, because it's just so much more natural. It's just a natural way to use technology. Again, it doesn't look natural right now, and it's clunky, and like they've got to iron the bugs out, and there's a lot of those. I'm not actually of the opinion that a lot of other, I would say like armchair experts are, that like there's all these fundamental breakthroughs that need to happen for AR glasses to be mainstream. I actually do think it's kind of inevitable at this point when you use the Meta displays. It's like, wow, they've got a couple of years of iterating on this, and this is a pretty compelling product. Whereas before it was like, they keep saying it's a couple of years out, but who knows? I haven't been able to take anything home. And so that was a big moment. And I think we'll have a couple of those in the next couple of years with Google and Apple. But again, the phone is safe, it's never going to go away. And
Yep.
I don't even know if it's going to be meaningfully disrupted within 5 years. If you're trying to like short Apple over this, I wouldn't. But I do think it's inevitable just because of the natural use of it.
Just on Apple, I mean, the implications here is that this will ultimately disrupt the phone in some way. Maybe it won't replace it, but it will certainly change the way we interact with technology. Yeah. Apple's got the headset. They've got the Vision Pro. They're now scaling that back because it's been kind of a flop. Are they working on glasses?
Yes, they are. I and others are hearing 2027-ish, maybe 28. For V1. Notably, Meta just hired Alan Dye, Apple's head of design, who oversaw Vision OS and obviously was intimately familiar with the glasses roadmap, and decided to leave Apple before that roadmap was shipped. So that, I think, says something, doesn't it?
Well, this glasses race is something we will continue to cover. Alex Heath, author of the Sources newsletter and co-host of the Access podcast. Always good to see you. Thanks, Alex.
Always good. Thanks, Ed.
We'll be right back. And if you're enjoying the show so far, be sure to like and subscribe to the Prof G Pod YouTube channel at the link below.
Support for the show comes from Public.com. You're thoughtful about where your money goes. You've got your core holdings, some high conviction picks, maybe even a few strategic option plays on the side. The point is, you've engaged with your investments, and Public gets that. That's why they built an investing platform for those who take it seriously. On Public, you can put together a multi-asset portfolio for the long haul. Stocks, bonds, options, it's all there. Plus, an industry-leading 3.8% APY high-yield cash account. Switch to the platform built for those who take investing seriously. Go to public.com/ProfG and earn an uncapped 1% bonus when you transfer your portfolio. That's public.com/ProfG. Paid for by Public Investing. All investing involves the risk of loss, including loss of principal. Brokerage services for U.S.-listed registered securities, options and bonds, and a self-directed account are offered by Public Investing, Inc., member FINRA, and SIPC. Complete disclosure available at public.com/disclosures.
We're back with Prof G Markets. A new report on OnlyFans just came out, and it takes a look at how much people actually spent on the platform in 2025. It also breaks down these numbers by region, so we got a picture of not only how addicted the world is to OnlyFans, but also which countries are most addicted to OnlyFans. As a reminder, for those who don't know, OnlyFans is a creator platform, but it might as well be called a porn platform. The way it works is people, primarily young women, post sexual and illicit content in exchange for money. And unlike regular porn sites, which are primarily driven by ads, this is a subscription-driven business. So primarily young men will pay a monthly subscription to get access to videos and images of primarily young women. Again, little heteronormative, but that is generally what is happening on the platform. Okay, so let's get to the report. How much did people spend on OnlyFans in 2025? Well, by country, in France, people spent $237 million. In Mexico, people spent $291 million. In Canada, people spent $355 million. In the UK, people spent $531 million. But the number one spender in the world was indeed the United States, which spent on OnlyFans again in 2025, $2.6 billion. So that is more money than this nation spends on socks or on toothpaste or on phone charges. It is also more money than our government spends on all of American public media. $2.6 billion. That's how much we spent on OnlyFans. Now, there's a reason that business news is important to us. It's not just that it's entertaining. It's not just that it impacts our portfolios and impacts stocks, but sometimes it can also provide something of a window into what is actually happening at the societal level. People can say things, they can write stories, they can go on Instagram and TV and tell you this is what's happening in the world. But money talks for itself. It isn't biased, it's neutral, it is a true reflection of who we are, what we care about, and what we value. And so I will tell you this statistic again. Americans spent in 2025 $2.6 billion on OnlyFans. Now, if that doesn't tell us what is wrong with our society right now, I don't know what does. As I've said on the show before, it's not just that this is porn. Porn has been around for a long time. Porn isn't new. But what is new with OnlyFans is the monetization and the commodification of what is a fake relationship with a person. It's the fact that young Americans are paying literally billions of dollars a year, not just to look at naked women on the internet. They can do that on Pornhub for free, but to engage in what they believe is an intimate and private relationship with a woman who, in reality, has no idea who they are and who, more importantly, doesn't give a fuck about them. It is literally a business now. It's something close to prostitution, but not quite, because it's also scratching this emotional itch. It's filling this void that exists not just when you don't have sex, but also when you don't have companionship, when you don't have friends, when you don't have love. And this is how bad the loneliness problem has gotten. It has literally become a multi-billion-dollar industry, and it is ruining the lives of young men literally by the millions. And that's not hyperbole. There are nearly 400 million users on OnlyFans today. Almost all of them are men. So we will continue to track this. I don't see any evidence that the business is going to slow down. And if I had to make a bet, my bet would be that OnlyFans continues to crush it in 2026. But let's be clear, this is about as close to the downfall of society as we're going to get. We went from Playboy to Hustler to Pornhub and now OnlyFans. And from what I've read, people were very concerned about those businesses throughout history. But I do believe we are beginning to approach the end game here. And I don't think that there is one company in the world that says more about what is wrong with society and what is wrong with young men in particular than OnlyFans. Thanks for listening to Prof G Markets from Prof G Media. If you liked what you heard, subscribe to our YouTube channel and tune in tomorrow for more.